What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you haven't already. Hit that subscribe and notification buttons as well. That way you're alerted to when we release new videos. We do release bonus content from time to time, but the nightly and weekend videos, like tonight's video, we focus on identifying triggers and targets for trades ranging from scalps and intraday trades all the way up through long-term swings or leap trades. So if you want a deeper dive into how we set up our charts with the broadening formations, the trading levels, levels of support and resistance, things of that nature, make sure you check out the bonus content on our YouTube page. We've got some couple of videos that dive deeper into that for you. If you're not familiar with this strat, make sure you check out the link in the description of this video. It has a quick reference guide in there for you, give you the basics of the strat, very simple way to learn price action. Also touches on the broadening formations. So yeah, hang with us through the full video. I'm sure you'll be glad that you did. We go through everything from small time frames to higher time frames. So let's check out the agenda for today's video. Make sure we do a good review of today's price action, Monday, March 9th. Kind of a crazy day, but then we'll zoom out like we always do, take stock of the week, month, quarter, and year price action. Then we'll zoom back in and set what we call the 4-hour markers, or the triggers and targets for Tuesday, March 10th, along with we'll do a quick review of the week, month, quarter, and year targets as well, triggers and targets as well. Starting out with the 5-minute chart like we normally do, and actually let's get to the 5-minute chart. Sorry, I wasn't prepared here. Let's go. All right, so we could see that. Let's just get today on here. Take yesterday off, or Friday off of there. There we go. So we can see that obviously we had a slight gap down. The in terms of the 4-hour markers, we've got our overnight. Previous high day up at the top of the screen. Overnight high. Then we've got previous low a day, and our overnight low is down here a bit further, but for today's price action, we've got these 3 4-hour markers here: previous high day, overnight high, and then of course our opening print. Which, why isn't? Yeah, where is our charts? Did we get the wrong chart up here today? Yeah, maybe not. Didn't have my chart prepared today. I apologize for that. There we go. So there was today's open, right? So we can see that, again, slight gap down, opened, pushed down into the gap, went about half gap and bounced. And if you're familiar with this channel, we talk about a lot of times intraday, even if we do poke into the gap, the halfway point of that gap is a lot of times a bounce point and can show some strength. So we obviously got that today. We got the lower high, then and lower low into the gap, but then reversed around, made this bullish engulfing candle, popped up, made a higher high than this high right here, came back down and made this higher low right at the top of where the gap was today, right? So we took that as a sign of strength, plus it's right at opening print. We went ahead and got into calls, and we bounced from there. We pushed up pretty fast. No 2 down candles or engulfing candles or anything like that on the way up to overnight high. Overnight high obviously is that first target when you're talking about the proven and repeatable strategy that we use, that is looking for higher lows at or above opening print to get into calls, targeting overnight high and previous high a day. Now we had a lot of stuff to get through on the way up to previous high a day. So frankly, with where we opened, overnight price action, and market internals as well. Let's go ahead and bring in the internals for QQQ. Come on now. What's going on with my charts? There we go. If we look at the internals for QQQ, we can see the tick obviously started in trend lower zone. The vol QD was a little bit of an anomaly that it was right at the 0 line. It wasn't in trend lower zone, but the breadth, market breadth, was in trend lower zone. So with that in mind, we knew, okay, we took the proven and repeatable strategy trigger, the higher low at or above opening print, but with breadth being so low, vol QD still being at 0 line or under, as well as the take, we didn't want to overstay our welcome in those calls, right? So yeah, we did jump into those calls, and we got rid of half of our position at overnight high. We're really just looking for that 49.33 area. That's been a big level of inflection for price, right? It was support previously, and we frankly thought it was going to be resistance at this point, because we had this daily downtrend line, this hourly downtrend line, this purple line. You can kind of see it slanted. It looks pretty horizontal, but it is going slightly up to the right. That's a weekly broadening formation. Excuse me. And then we have last quarter's high right above there as well. So we did expect some rejection here, and we when we got this, where we got a lower high, lower low, we went ahead and sold the rest of our position here. Now, what we did notice was internals started to push back up. Let's bring back there. Internals, right? So vol QD was back. It actually had broke above zero line, went back below a little bit, but had broke back above. ADQD was actually broke out of trend lower zone. It did a little bit earlier too, and then bounced basically off a trend lower zone and was on its way back up. And the tick was back above zero line. So we were checking. You got to make sure you're looking at all time frames, and you could see that on the 15-minute. Actually, let's I can probably bring up the mixed grid here. If we look at the 15-minute, this chart right here, oops, come on now, maximize. So we can see right here, we got the higher low, right? So we ticked in, we bounced off of this, this line. We had the lower high, lower low on the way down. So we sold, we bounced, but then we noticed though, there's a great opportunity for a higher low there. So with that higher low, we did enter some more calls, ended up getting the higher low here, which also triggered the higher low on the 1 hour as well. If we go to the next time frame, you can see here we got that higher low here. So didn't expect this burst that we got. That obviously came off of the news. It's a very news sensitive market right now. So it did push us, right up through there, right through the 50.76. That's really what we were looking for. And then we did look, I think, what was it on the 5-minute? Yeah, we got come on, make it bigger. Once we got this basically kind of looking like a double bottom on the 1 minute, but just equal low on this 5-minute without a higher high or even a lower high, we went ahead and got rid of a majority of the position here. We did leave a couple of runners just in case we continue to push up overnight and news is positive and things of that nature. We're back towards the upper direction, but we're willing to take the loss on those. Hopefully it wouldn't be too big of a loss, not like some huge gap down tomorrow morning, but we're willing to take the loss on those runners due to the two different sets of calls that we were able to take advantage on the way up. So that's how today's how today looked from a zoomed in point of view. Let's go back to the big chart here, and so we kind of looked at the 15-minute and 1 hour, how we got those higher lows. If we look at the not the 1 hour, if we go to the 4 hour, get the good chart up here, we can see that we had this 2 down, 2 up that actually went high enough to trigger this one combo 2 down, 2 up. Get a little bit cleaner chart for you here so you can, there we go. So you can see we had the 1, 2 down, 2 down, 2 down. Those all combine to make 1, 2 down. So we have a 1 combo 2 down and then 2 up, right? That triggers once the high of the 2 up gets breached. And, obviously the magnitude of that move is not the high of the 1, but the high of the candle to the left of the 1. So it would take us all the way back up to market maker's expected move high, that slight gap that's left from last week as well, back up towards the month flip, but it also runs into this weekly broadening formation as well. So we do want to keep that in mind, that even if we get up to that level, don't get too far ahead of our skis. Once again, we are basically coming back into the bottom of the range, right? This was this first look below and fail, but if we look at the overall range, I'll just do the box trick again. Right, overall range that we've been trading in has been essentially here, right? We'll even bring it up a little bit to 70, right? Basically from 70 to 56, right? So We had to look above and fail to go back into this zone. Oops, come on. We had this look above and fail. We had this look below and fail. A little bit of a look above and fail, but that's why it kind of only went down to the middle of the range before it popped back up for a real look above and fail back to the bottom of the range, where it actually fell out, and we got a lower high here. So we do have to still keep in mind, yes, we had this great push today from the lows, but there's still plenty of room to put in that lower high. We would have to truly complete the magnitude of that one combo 2 down 2 up, and breach the top of this 3 here in order to make that higher high. And again, at that point, we're not in an uptrend still, because we're coming from a lower low. We're actually just creating a broadening formation at the bottom of this range that we've been trading in for weeks. So just kind of keep that in mind. Today was a very positive day for the bulls, but just kind of temper expectations. Overall, we should go back to the top of the range if we get back up into the main part of the range and get some type of higher low. So then we can start targeting the high of the range again. But as of right now, we just need to really get back up into the range. And so we want to focus on making that higher high on the 4 hour and really the day chart as well. If we pull up the day chart, we had the bullish engulfing candle today, but again, we've got to get up. Come on, thinkorswim. We've got to get up here to this $57, $58 level before we're making a higher high. And again, we're just coming from a lower low, so we would just be creating a broadening formation at that point, right? So keeping all of that in mind, let's look at the week chart. Let's zoom out a little bit further here, and on the week, we can see, right, we obviously created the top of a broadening formation here a couple of weeks ago, and now we're just looking to see where the bottom of this broadening formation is going to be. We've obviously made this lower low, but it came from the higher high, so that's definition of broadening formation. If we are going by rules of the STRAT, we talk about a 3. Once you breach one side of the 3 and then price comes back inside of a 3, you should breach the other side of that 3. So looking for the $42 area at the least if we do get another push down, but then we've got this lower low, this solid higher low, from the push up that would be the next target on that way down. Now again, we did kick off, let's switch to the month here. We did kick off this 2 up 2 down on the month when we broke below last month's low, and we have completed that strat, right? So reached magnitude there, but what that has done is kick off this one combo 2 up 2 down, and again, the magnitude of that move is not the low of the 1, but the low to the left of the 1. So that brings us back down to the $28 area, which again, we have another gap down here. So we've been talking about this for weeks really now, so it shouldn't be too much of a surprise to anybody where price has gone to after certain triggers have been triggered. But none of this should be a surprise. We've had a lot of this mapped out. It's just being confident in your levels and following through to see those. Right now, obviously we let go of a lot of or actually all of our puts at the end of the day, or not the end of our trading day on Friday, which was almost the end of the day. So we were, really looking for that lower high on the 1 or 4 hour time frame. We did get that lower high on the 1 hour, but it had no follow through, right? If we just look at that 1 hour, here's that lower high, but look, we just barely breached below and then just pushed straight back up. So was nothing really to react off of there. Obviously you could have taken that trigger and entered puts, but those would have been stopped out, obviously either even or slightly negative, depending on where you put your stops. But yeah, that's, we do have a higher low here on the 1 hour. So we do have something to kind of work with as far as a target when we're looking back to the downside short term, but, long term, when we look at this month chart, you want to continue to push up if you're a bull, but if you're a bear, this is very welcoming, right? That we had that trigger of that one combo 2 up 2 down this morning, all right? On the quarter, right, not a whole lot to talk about here. If you're familiar with this channel, you know that earlier on or late last year, we triggered this one combo 2 down, combo 2 up, which had a magnitude up here at 70.08. Obviously, we reached magnitude of that, breaching, going above that 70.08, and we're having that little bit of a pullback here. People taking profits. economic data and geopolitical things going on. So we have had this pullback, but for all intents and purposes, this strat was completed on the quarter, right? And that's the same for the year, right? 2025 was a 2 down, right? And that, come on now, get out of here. 2025 was a 2 down, and then early in January we went 2 up, triggering that 2 down, 2 up, magnitude being the high of the candle to the left of the 2 down, which that high was 70.08, just like on the quarter. So again, we've run that strat to completion. So on the quarter and the year, there's not really a whole lot to look for right now. Other than if we start pushing back to the upside, are we going to reach all-time highs at that 74.21 level? But other than that, there's not a whole lot to do. We've really got to wait for some things to shake up on the quarter and the month and the week time frames to really move the quarter and the year. I'm sorry, the month and the week to move the quarter and the year. And that one combo two up, one combo two up, 2 down on the month might be what we need, right? If we pull back down to that $28 level, right? If we complete that strat, if you go to the quarter, right, that obviously gives us this 2 up, 2 down. Depending on when we actually get down there, right? We've got 1 month, a little less than 1 month, in the rest of the quarter. So if we continue to push down this quarter, say we close with a red inverted hammer as opposed to a green inverted hammer or just a doji, right? Then obviously the risks are higher to going 2 down very early in the beginning of the second quarter. And if we go 2 down, then we're looking at on the quarter that magnitude of 28 for a 2 up, 2 down completion as well. So if we do that and we complete the flip, the reversal, right, and reach magnitude and then find footing and start to push back up, then that could present us with a higher low on the quarter time frame. And then if the next quarter goes 2 up, then we're looking at a 2 down, 2 up triggering and taking us back up here to the $73 area and possibly higher to get that all-time high at 74.21, right? So this pullback on the month, week in the month, is kind of what we need to set up another strat reversal on the quarter and the year back to the upside, right? So nothing to really worry about overall. We've had plenty of warning that the price was going to be, or that if price does go down, where it would go down to. And yeah, I feel like we should be very prepared if you're a follower of this channel, and just continue to trust your levels and let things play out how they play out. All right, so let's go ahead and start to take a look at how we will attack things tomorrow. Oops, I guess I didn't move my 4-hour markers. Let's go to the 4-hour. And let's move the previous high a day. There we go. And previous low a day. We'll move that. All right, so we got to do it on our major chart. So swing. All right, and we move previous high to today's high. Activate previous low a day to today's low. And one more chart. There we go. Previous high a day. And previous low a day. All right, let's jump back in. So if we look at things from a scalping perspective, early morning scalps using the proven and repeatable strategy that we employ in this channel, right? Being looking for higher lows at or above opening print to get into calls, or looking for lower highs at or below opening print to get into puts. This is how things should look tomorrow, right? Let's get all of the 4-hour markers in here, and let's see, after hours it's got down to 53, or we're at 53 right now. It's gone down to 52.75. Let's just say after hours we come down here and we test last quarter's high, right? When we open up tomorrow, the last 4-hour marker that we'll need to put on the chart is the opening print. So let's say we open down a little bit from the close on Monday, but right here at that 138.2 fib extension of the April 7th bull flag, right? say we open here and we push up, maybe get a rejection off an overnight high and we pull back, but then we get some type of higher low at or above opening print level, we want to look to get into calls, and we want to target overnight high and previous high day, as our targets. Now, obviously, there's not a lot of magnitude to the upside, and if we do, reach those targets with momentum and there's follow through, we get some higher lows, things of that nature on smaller time frames. Then you can look at the 4-hour triggers and targets and the one day triggers and targets for your further out target points. But for the early morning scalp or early entry into a longer day trade type of trade, we want to look for higher lows at or above opening print to get into calls, targeting overnight high or previous high day. Now, if we open here and we push down, maybe bounce off an overnight low and then push back up, but then get some type of lower high at or below opening print, we want to look to get into puts, targeting overnight low and previous low day. Obviously, not a lot of magnitude there with overnight low, especially like even if you get the perfect, lower high right at opening print, there's not a lot there. So we do want to look at the further down target points in that case on the way to the previous low day, because it is quite a ways to go with what now appear to be some pretty good support levels on the intraday time frames, right? So 49.33 is obviously going to be that first level of support that you would look for on the downside as a possible exit or starting to scale out on those puts, right? And definitely want to pay attention to QQQ internals and just looking at chips overall, looking at NVIDIA, ABGO, AMD, TXN, who else? Qualcomm, Marvell, Micron. Keep an eye on all those. TSM, keep an eye on all of those at the same time out of the corner of your eye, and try and see, are they all pushing down? If they're all pushing down, then could we possibly get below 49.33? If we get to that 49.33, see some type of corrective activity and then some type of lower high, again on the 5-minute, maybe 15-minute time frame, then yeah, we could have that further push to the downside and start testing some more of these levels of support on the way to previous low day. Should we get to previous low day, then obviously we've got the gap from a few last week to deal with, right? That we should close, right? But again, we could bounce off the top of the gap, so just with the gap this small, those get a little bit harder to play, and we'll see. Even if the gap does get filled, do we bounce off of the bottom of the gap? Just keep that in mind, just because, again, we'll have come a very long way to get down to that point, especially if we do that during trading hours. If we open, down here at 49.33 and we get a push to the downside, then yeah, I would think that the gap close is probably a better bet. But if we open up here and we're just pushing down to that 49.33 level, I wouldn't just think, okay, yeah, now we're going to go close the gap. This is definitely a level of support intraday, so I would be watching for that to the downside. Keeping in mind that technically we are still in a downtrend on the 4-hour and the 1 day, right? We haven't made higher highs there. So, it's kind of, you just got to be patient, have faith in your levels and, stick to the rules, right? Keep those losses small if the price does go in the opposite direction of you, and, just get ready for the next move, step back, reassess, and get ready for your next entry and make that a better one, right? Let's go ahead and zoom out to the 4-hour time frame, look at things from more of a day trading perspective. Oops, there we go. And again, remember we talked about this range that we've been trading in for the last few weeks. We've done a look below and fail. We've done a look below, and it looked like it was going to be a look below and fail, but push back up, and right at the bottom of the range we got that lower high and looked below some more. So is this just a deeper look below and fail, or are we sitting, is this push up that we've had today just to set up that lower high, and a further push to the downside? Just got to keep that in mind. So if we do go to the downside, if we go 2 down in that first 4-hour on Tuesday, that gives us a 2 up, 2 down entry, obviously at the low of the second 4-hour candle from Monday, and the exit at the low of the first 4-hour candle. Keeping in mind we do have that gap there too, so you may want to leave a couple runners to get that gap fill and any further push down that we might get. But that would be the strat completion, right? 2 up, 2 down, entry at the low of the 2 up, exit at the low of the 2 down, right? If we get pushed to the upside again, then we're completing, not completing necessarily, but we're continuing this one combo 2 down, 2 up, which should take us back up to the high of the 3 at the left of the 1, right? Back up to this $57.69 level. Again, another gap right at the edge of the edge of the strat completion. So you may want to leave a couple runners to get that gap closed and anything further that we might get on that push up, right? On the day chart, we've got a green 3, excuse me, a green 3 from Monday, green bullish engulfing candle. So there is the opportunity for the 2 up on the day, but a 2 up is not necessarily the most bullish thing in the world, especially if we don't make a new high, right? If we go make a higher high, then it's definitely looking a lot more bullish. But if we just do a simple 2 up, don't really go anywhere, or even have like an inverted hammer 2 up, what we might call a failed 2 up in the strat world, that could just be setting up for Wednesday's 2 down for a 3 2 up 2 down reversal, which would take you back down to the bottom of the 3, right? So you got to be careful of that if we get the 2 up. At the same time, tomorrow, if overnight we get some big drop and then we open up that first 4-hour candle and we push down and make a 2 down, on the day, maybe that second 4-hour, maybe we push back up to make a hammer and what we call a failed 2 down. That could just be setting up a 3 2 down 2 up reversal back to the upside. Just really expanding this broadening formation is all it would be doing. So keep an eye out for that. Even on the day time frame, tomorrow could be a little bit misleading, and so you really want to look at how the candle finishes, how the day finishes out. Do we get a sell-off at the end of the day to make that an inverted hammer 2 up, or do we get squeeze, a squeeze of bears at the end of the day to give a failed 2 down type of look, right? That will give you a better clue as to whether or not we would probably be doing some type of 3-2-2 reversal, whether it be to the upside or downside. All right. We've looked at the charts quite a bit. Let's go ahead and go to the notes and look at the hard numbers, right? So for Tuesday, March 10th, there will be 206 trading days left in 2026. And we know that the close price on Monday, March 9th was 53.32. We know that the week opened at 45.51, meaning that in order for the week to go red, it will have to go below 45.51. But the month opened at 58.15, so the month is still red. So there is still a conflict of time frame continuity, right? Because the quarter and the year are green, but the week, the quarter, and the year are green, but the month is red, right? So once if we flip that month back to green, then obviously momentum is back on the side of the bulls, and you want to look for those targets to the upside. But until that happens, expect a little bit more chop. We know the market makers' expected move for the week was plus or minus $9.93 from the close price on Friday, which gave us an expected range of 57.82 to 37.96, which would, if we go to the downside, give us a 2 down on the week. And even if we were to reach market makers' expected move high for the week, that would still make it an inside candle if we didn't breach the downside. So we'll have to see where things end up. We could end up with the 3 on the week. We never know. We know that there is a slight gap above at 57.72 to 58.05. That is at the top of the one combo 2 down 2 up move on the 4-hour. And we know that there is a gap at 44.53, which would be at the bottom of the 2 up 2 down reversal on the 4-hour. So upside and downside both have gaps that are within reach. So again, got to be patient. Got to see which way we're going to go. There are further gaps to the downside should we continue to the downside, but they're a little bit of ways away at the bottom of that one combo 2 down. 1 2 up 2 down on the month is where we'd start hitting those gaps again. So right now, just concentrating on the 2 that are closest to us. And again, on that 4-hour, we would have the 2 up 2 down at 49.01. to take us back down to 44.53. Again, it is quite a ways to go, so we do have some intermediate targets on the way there. However, if we do reach magnitude and we've still got momentum, again, we've got that gap close right there at 44.15. To the upside on the 4-hour, we have a 2 up continuation, so no magnitude for the move, just a trigger in targets. It would trigger at 53.78, excuse me, and we have the extended targets here to the upside listed for you. On the day, we talked about there's a possibility of going 3-2 down if we get back down below that 44.53 level. No magnitudes for those moves. It's not a reversal. It's just the start of a possible reversal or a continuation. So only a trigger and extended targets, no magnitude. So 44.53 would trigger the 2 down, and we would have of course the gap close at 44.15, and then the extended targets that we've got listed out here for you as well. Into the upside, that could trigger a 3-2 up at 53.78. No magnitude there. And looks like I forgot to fill those in. So we have the 53.78 on the day, right? and as the trigger. 54.81 obviously is going to be our first target because 54.81. If you're familiar with this channel, you know how we talk about how that level is usually a good indicator as to where price action will be for the rest of the week. The test of that level, that is, whether we test it from above and bounce, usually is a bullish signal. If we test it from below and reject, that's usually a bearish signal. If we test it from either side and just kind of go sideways, then a lot of times the rest of the week is chop, or it's just sideways action. So we do want to see how price reacts there. That's why that will be the first target. Second target would be the 161.8 fib extension of the April 7th bull flag, right? So 56.92 is going to be our second target. 56.92, right? And then we would have the completion of the STRAT on the 4 hour, which is that 57.69, but we do have the gap close here as well at 58.05. So we'll just put that one as 58.05 because we have the 57.69 target on the 4 hour time frame, right? I think we'll take that last target off there. That's quite a ways to go. Even with the momentum that we've had, right? But that's what we have for our triggers and targets to the upside on the day for the 3-2 up, right? On the week, we have triggered the 2 down at 40 when we went below 46.80 intraday today, right? We did close back above it, but intraday we did break below it. So we have not hit the first target, which is the gap close. Again, it's not a STRAT reversal. It's just a continuation, so no magnitudes. We only have targets. So 44.15 is that first target, and then we have the extended targets out here for you as well. If we were to get back to the upside, that would give us a green 3, not a 2 down 2 up, but it would give us a 2 down green 3, triggering at 62.82, targets of 65.04 and 70.05 before getting up to a magnitude of 72.36, right? We talked about on the month, we've already gone 2 down and completed that strat by breaching 45.08, which then did kick off this one combo 2 up 2 down, which has a magnitude all the way down at 28.12. So we do have these intermediate targets on the way down in case SOXL or the market, or however you want to look at it, wants to set in a bottom and we want to move back to the upside, at the very least into the range that we've been trading in for the first part of the year, right? Those would be your intermediate targets on the way down to that ultimate magnitude. Now, if we were to go green 3 on the month, we have to get up to 72.36, so quite a ways away from there, but it could happen in a few days with SOXL and how it moves. So we'll just keep that in mind. Won't really talk too much more about it in the targets right now because we're not close to breaching it, but that is out there still. 72.36 does give us a green 3 on the month. On the quarter, we already talked about how we ran the strat, the one combo 2 down, combo 2 up, reaching magnitude at 70.08, so not a lot to work to do there. And the same on the year, we did that 2 down, 2 up, reaching magnitude at 70.08. So we're just talking about how on the, we need something on the month and or the week to trigger in order to give us some type of reversal on the month. I'm sorry, on the year and above. On the quarter and above. So, the eyes right now are really on the week and the month. Once those resolve what we're going to do, then we'll have a better idea. But for now, it looks like until we make some type of higher high, then higher low, we do have the possibility of still seeing that $28 level. So we'll see how things turn out on the day. Do we get that 3-2 up or do we get 3-2 down? And then how does that 2 up or 2 down finish, right? Those are going to be key moving forward. So there you have it. Those are your triggers and targets for everything from a scalping perspective all the way up through the 1-year chart. Try to put in as much information as possible without taking up too much of your time. So we do hope you enjoyed the video. If you did enjoy the video, go ahead and give it a thumbs up. It's free, but it helps the channel grow, and we really do appreciate it. Big thanks to all those who continue to tune in and who are staples of this channel. We do appreciate your support, and we hope that we're continuing to provide some good information for y'all, right? That's the main objective here. We don't have a membership fee or anything like that. If you come and hang out with us, hopefully you just pick up some good knowledge, some good information that you can apply to your trading strategy and help make trading just a little bit easier, right? So that's what we've got for today. Again, thumbs up goes a long way, so we do appreciate those thumbs up that we do get, and we'll go ahead and wrap things up like we normally do. If you're watching this Monday night, we hope you get some good rest tonight. wake up refreshed tomorrow morning. And if you're watching this Tuesday morning or Tuesday throughout the day, we hope you had some good rest last night. Woke up refreshed this morning, and we look forward to getting out there and trading with you.